Hey guys, DJ from PTA. Going over two stocks in the SPY today. No trades for me today. Been off the desk for majority of the week. Just really been trying to get things in order for a new place that I just moved in, and just taking care of a lot of other different things. So it's kind of pulled me away from trading. But I'm one of those people who look at the market every day. Also want to keep and continuing with the material that we have, that we coming out with every day with the YouTube and channel and everything. Everything's starting to grow. So just wanted to stay consistent and make sure you guys stay abreast on the strategies and ways that we're looking at the market. So first up, going over the SPY. Today was the first day that I can say that it officially cracked above the actual trend. As you can see here, this is what I was looking for to be the beginning of what we would call some type of reversal. So again, we had us a big drop from the highs back down here to the low. Had us a nice bounce, which will form the A. And then, technically you can look at this as being B. So what I will be looking for is some type of pullback to here to the trend and some type of continuation back out. And ideally that would be somewhere in the north of here. Now again, guys, it might bounce out here and continue to go down, but that's what would be an ideal play of looking at it going long term. I still think we're in a bear market, simply because of there's no new fundamentals or anything that came out to say that, hey, this is different. So outside of that, that is the potential play that I would be looking for moving forward. So still something I wouldn't get involved with, but there's traders that trade every day. Fine, there's been a great opportunity just from here to here. From this point to this point here was just a great opportunity to go long, and this may be the setup for a long-term trend difference and maybe rallying back up. Don't know, but hopefully things will pan out and we shall see in the future here. All right, so the next stock or next thing I want to go over is APLD. APLD had a nice run the day before on the 19th, so it was more of a second day continuation. Didn't get quite the amount of volume we got the day before, but ultimately, this has been good volume. Still 93 million is nothing to really just look over. So this was worth looking at. It almost rotated its float. It was up about 17% from net change. So it was a decent move. Looking over the chart, this is one of those plays you would have to get in first thing in the morning to really capitalize on it. There was entries midday, but to get the bulk of the move, to really get in, here and then kind of take it there, it would have been a situation where you had to really get in early in the day. As I always do, guys, I draw my support and resistance to see what I'm working with, see what the market is telling me and where different sections are, and then that's where I play my key areas. So right here being 340 will be a key area for me. Looking here, this is the area that it bounced off of. I probably would have put it somewhere right, maybe about right there, just because it include all these candles and then it broke away. So 255, 250 area. And then anywhere that there's a gap fill, so somewhere there, 215 and then lower. So looking at this day, my key areas would have been 215, 255. Coming into that day, this is where you would have saw this massive move on July 19th, and then you seen this nice pullback in pre-market. I would have been really playing it off of the key area, previous day close. That was a very clean key area, previous day high, coming into pre-market that day. So, I typically like to see a move up. So my entry probably would have been around this 255 area. I'm noticing stock just didn't have a lot of range, so it might have not just been that big of a play per se on that day. It was really that second day continuation, but it didn't really hold. So, again, it's just how you're viewing the charts, how you're looking at this. I probably would have played somewhere around here, getting it off this bounce and pulling and just holding. So let me go down here into the 1 minute. And what I normally do is look for those key areas. So let's go back to the 30. This would have been a nice entry day area right here. So we'll just call that 230. And that would have, somewhat look at this as a push away. It held there. So the open price on this one was 228. So maybe 225 might have been an ideal area. That would include more candles and give it some breathing room there. Looking here, you probably could have played it right off of the 260 area. That was another key area that I would have been looking at as well. And that's because you had a major rejection, and a pull down from that 260 area, and also pre-market high. So that area, this area, would have been key intraday points. Just as you see, pre-market played as an interesting point as well from the 295, and then that flush down. So zeroing in on the 1 minute, knowing where my areas are, that is where it would have gotten interesting. Looking at seeing how the stock would have moved in those key areas. There was a couple areas called out, and again, it just depends on how you trade, how you view the charts. Personally, looking at the trade, I probably more than likely, and I like to get larger time frame holds, so I probably would have played it somewhere here on the entry day. If I didn't catch this one, probably would have either played it here or here, more unlikely here to get it low, just because I would have seen just as how much room it may have had, and it, would have loaded up. Probably not, just because of the structure in the pre-market. This price action wasn't impressive to me pre-market, so probably would have had my entry somewhere here, coming into this rant. More than likely here, now that I'm really looking at it. The only reason I say that is because you kind of had a wash. It was kind of like a drop, and then it bounced and used this 240 area as support. When it bounced back up to the 267 and pulled back, this would have been ideal right there. Ideal would have been right here. We had a double support and then a break off the trend. So maybe the 250, 260 area, nice little rip to 295, get out. I say that because the range at the time was only like 40 cents. So if you can get yourself a good, 4 or 5 cent brisk with a 30-cent gain, it would have been a worth it trade. A little bit less than I like on the range, but you have to take your positions and take your actual trades that actually make sense, regardless of the other numbers. The last trade will be SIDU. Now, SIDU is a former runner. It ran on the 19th, did pretty good, 89 million in volume. And then again, we always look at those second day continuation. Now, the second day continuation on this one, SIDU was very shabby. It only had 7.5 million. So, again, guys, I always, look at my lines and see exactly how I would have played it in these areas. Will actually make sense. That 395 area probably would have been interesting there off the daily. And then this area here, we just call that 430. So that 430 area would have been interesting to me. And then, these areas up here, 513, 510, 515, stuff like that would have been interesting as well. So circling into the 30-minute and just looking at the chart, you had a big, massive run up. We didn't really get a drop till here. So this was a pull down up under this green line. This green line marks previous day close. So this stock went from what we would call red to green. Let me explain that process. Red to green would be whenever you see, in this green line represents previous day close. So whenever you see a stock drop below that line and then come back ferociously, you usually get a crack and above and then maybe a hold. So what you're looking for is what we call a red to green play. Now, this is a term that active traders know about when they say, hey, the stock's going red to green on the day. That means that it's actually climbing back over the previous day close. So it's going from being a negative to positive for the day. Those are great areas to get in because there's a lot of volume and support and resistance in that area. So looking at this, it's definitely here. This would have been the area, because you really didn't get any support come in. Maybe about right there at 370s. You had a couple of rejections and stuff, but you really didn't. This would have been your intraday support right around here. So we'll just call that 375. And that would have been your ideal area of support. Now, if you zero down to a 5-minute, that looks a little bit different because you have to factor in volume. Now, the volume at the time wasn't necessarily there, but you did get your drop. It recollected, came back up. So it treated this 360, we'll just call it 360. So that, like I said, 360 area, that's going to probably be your entry day hold. So, we got an entry day hold off the bigger time frame here. This is definitely a smaller time frame, so I would definitely wait for that bounce. You see that it kind of held, and then this would have been your entry right here, right off of this play here. So this zone off the 5-minute, there's really no volume, and then as soon as it got to this area, cracked through 395, red to green, broke out pre-market, broke out previous day high, and continue on, and it hit that 430. So it's not a big trade, but this trade was small, very small risk. I mean, even if you got in here, let's go down to the 1 minute. Even if you had got in, like right around here or something like that, you looking at literally like 6-7 cent risk. I mean, even at 395 break, you only really looking at 15 cent down to support. And that's, if you do hard support, it would be 20 cent, being 375, and then it went from 395 back up to 459. So you still got a 60 cent swing, so you still looking at a 3-to-1 trade. But looking at the trade, I probably would have got in here, had a good 10 cent risk, maybe 15, and just let it rip back up, because you had that great push from that red to green play. And I think that was pretty much why this stock was running, because people saw it, didn't really have a volume and pickup, but this was just a clean play, a good red to green play that people saw, and they took advantage of. So there's multiple ways, different confluence that makes a stock move. In this particular play, this is the reason why this one moved. It was basically a nice red to green play. All right, guys, if you have any questions, concerns, leave them in the comment section. Make sure you hit that like button and subscribe. Make sure you hit the notification bell so you don't miss any of our videos. And guys, like I tell old traders and new, stay studying and stay focused.